All right, good morning, everyone. Stock market technical analysis. We're going to get right into the charts here and look at what we got going on. So we've got the Fed out of the way. And basically, as far as I can see, welcome to the bear market, everyone. So I don't see much telling me that that's not the case. I've been calling for a bear market for a little while. Again, we've been short the QQQ since January 4th. And, going into the Fed, things are always going to be a little whippy and just crazy. It's just kind of the nature of high volatility events like the Federal Reserve meeting, and especially this meeting because they're raising rates and the market is throwing a fit today. So yesterday, whipsaw signal, you saw that. Again, I don't usually trade on the Fed days too much. I don't, I keep an eye on the markets, but ultimately it's just really choppy. Things will shoot up and then drop down and shoot up, and it just whips you out, and you can just lose a ton of money by trying to, gain those bounces. So usually what I do is just kind of take a step back, really sit on my hands, analyze what the charts are doing, and then we'll see. And usually the first move or the move that you see on the Fed day is not the real move, and that's what we're seeing today. So today the market's selling off pretty hard. And sorry about that, needed to pause. So we've got basically the markets are selling down below my key level of support, which was about, it's about 318, 317.50 is where I have it marked right here. Again, this was the area that back here, February 22nd, we held support. We held it again, rallied, came back down to it, and look what's going on. We've held it. Now, yesterday after the Fed, they basically rallied it pretty impulsive up to a level of resistance. I did see that. I didn't put out a video just because we kind of hit that towards the end of the day, and it was a Fed day. So, again, just not something I was, going to point out. Today, gapping down, and not only just gapping down, selling off. Now, what I was thinking is, okay, we'll gap down, we'll sell down to maybe some near-term support down at this, and we were heading right down to this 318-ish level. So I figured, okay, if they're going to hold it, they'll probably hold it right here. So I got out of my shorts temporarily. I put a comment in the video from yesterday, and then I was, just, again, my thoughts. I think we're going lower, so if we held there, then that would be a good spot to potentially kind of get out of your shorts and just wait and see. But we continued lower. I jumped back into those shorts. So I remained short right now. And we're well below the key level. We're at 313, heading on down towards 300. I think the price action today with the whipsaw yesterday and then the big sell down today tells me that we should head lower, continuing lower. We really don't have any business being down in this area after the big recovery from yesterday. To sell down all the way down here and break that key level of support, it tells me we're likely going to continue lower, and this level is going to give way. So I'm going to stay with my shorts for now. And again, glad I stuck with my shorts yesterday because obviously, that was a hard move to kind of ride out. Not too bad because, again, we're really profitable. If you take the shorts at key levels, again, we took it on January 4th, and then I covered my shorts down here in March, reshorted the QQQs right here on March 29th. So, again, if to ride out a little bounce like that is not that big of a deal. You give up a little bit of profit, but it's minor profit compared to what we've made so far. So just to kind of reiterate, we are breaking that key level. That's the key level I'm really honed in on. So if we can't recover that today, then it tells me we're likely going lower and probably quite a bit lower. 300. Again, I've talked about near-term targets and stuff, and right now about 298, 300-ish on QQQs, I think is an area where we should get a bounce, at least a minimum bounce. Again, from the top of Qs all the way down to that level from the highs, Qs will be down about 30% roughly. That makes sense that you're going to get some sort of an impulsive rally there, so keep an eye out for that. We don't have to get it. We could just continue lower. But I just see really good support there. It makes a lot of sense that we do get a bounce. Okay, so in the short term, I see us going lower. I don't know if we're going to get much lower today. The Qs is down 5%. That's a huge move in the Qs. You don't see moves like that too often. So to see a big reversal from yesterday's rally and pretty much the entire rally sold off, it is just a massive move and tells me we're likely going lower. This is likely the panic move that we're going to see now, where it's just really impulsive kind of panic selling as we just collapse down to that 300 area. And that might signal a near-term bottom. Okay, so looking at IWM, and again, when I say near-term bottom, I'm not talking about from there we're going to rally off to all-time new highs. Okay, what I would expect is maybe we get a bear market rally. But again, I assume we are in a bear market. I've talked about that. I've put that in my thumbnail saying, guys, I think we're heading into a bear market. Here's the reasoning why. All right, here's IWM below the key level, impulsively below too. This is impulsive selling. So this is clearly what you need to see for a sell signal at 188. Very impulsive selling straight down. So I'm assuming we continue lower down to 170. All right, down to our 170 area of support. And it looks like we should do that. So I don't see any change in that character. The one thing you want to note is the divergences on both QQQs and the IWM. See this divergence. Look at the PPO. So see, we still have bullish divergence. It's there. So we need to take those out as kind of the, ideally the final nail in the coffin for the bulls. So what you want to see is just more selling probably tomorrow or to round out the week, basically, where we run down, take out the divergences, hit our low support, and take out the divergences. That would just signal to me that, okay, this is a bear market, clear and obvious at this point. All right. So that's kind of what I'll be looking for is, do we take out those divergences in the next, few days, or maybe even I don't see it being much in terms of weeks. If it doesn't happen this week, maybe it happens next week. We take out those divergences and we continue down to those those levels of decent support. Okay, moving on. Gold. Okay, so gold, kind of the opposite move of the market. Rallied yesterday a little bit, selling off today. Still holding bull trend, still holding the bullish trend in gold. But again, we could run down and hit this area of support about 1840-ish, and the 200-day moving average is right down there. I think that's where it's heading. We continue to kind of build bullish divergence, and I think we're going to continue to do that. I don't see a sell signal in gold. I see just maybe we're getting close to the bottom, but maybe some more downside here in gold, down to that 200-day moving average. Okay, so that's really all I see. And then the miners, looking at the miners, they're selling off pretty hard today, but you can see like GDXJ hitting the support, and I've kind of got this dual support area, but basically hitting this area of support right here. If you look at the hourly, still have bullish divergence on the hourly. See that? So see, we made a new low today, a little spike down low there, keeping the bullish divergence. So again, that's what it looks like these miners are doing. They're building a bottom or building a base. So now if we have some sort of impulsive selling from here and we take out the divergences, that changes the technical picture. And, at that point, I probably wouldn't like these miners that much. But the way it looks right now, it just looks like each little dip down with these negative divergences, bullish divergences are telling me that, okay, these are opportunities to buy. So maybe we see a flow to safety. All right. If we're going to get more selling, you might see that safe haven play where gold starts to rally pretty impulsively as people run into gold, and the miners should benefit from that. So seeing, again, there's GDX hitting our trend line close to at least the 200 slightly below. I kind of adjusted my trend line. The GDX was looking a little different. So not exactly confident on the GDX because, again, my downward trend line comes from the highs. I've got one reaction here, and I don't really have a third until I just got it right there. So, okay, but some of these miners, let's look at like PAAS. You can see a little more downside probably. Again, here your support's right down here, so we could come down, hit that, keep our bullish divergence, continue to kind of build a base. I'm expecting this is probably the last tag of this trend line. If it's going to rally, then we should probably rally here and maybe head off. But again, just kind of this impulsive move running down. AG is another one I've pointed out. Again, just running into support right now. You can see here on the hourly, bullish divergence still there. See it? It's kind of right there, and we're making kind of a new low. So this is a buying opportunity here. It looks like an objective area to add to the position. Looking at the daily, we've undercut the day a little bit, but I think we'll probably hold up here. Should at least. Okay, oil, and mostly these oil stocks, DVN. I'm not so sure about this one right here. I might cover this short trade. Here's the reason why, all right? If you look at the daily, if I can get my line to adjust, there we go. See all these support lines here on the daily, support. We recovered that trend line yesterday. Now that was Fed day, so we kind of just throw that out and just wait to see what happens, in the following days after that. Today selling down, but so far bouncing off of this support line here at 65. I need to see this thing back below this trend line. Ideally, I see it down there today or tomorrow. So one way to play it, you could cover the short trade here. Obviously, it's for a loss. We entered it right here, and if you cover it here, it's about a 7% drop if you've just been riding out this trade. I took some profit on the dip right here, and then I added back that short, so not nearly down as much, but I need to see DVN selling down, breaking this trend line again, and if we don't see it, then you might want to give it till tomorrow, just, the day after the Fed, maybe give it till tomorrow, see if we break tomorrow. Or another way to do it is you could cover the short and then re-enter the short if we break tomorrow, like that. This should be the top, so I should see only selling from here and not really anything besides selling. You can maybe hold up right here for a day, but it really shouldn't go much higher from where we're at about now. So if you don't see that, that's probably an opportunity to probably stop out on the trade. Again, we can't get them all, but maybe give it a little room. One thing about DVN yesterday, the rally up, we made a new high right here yesterday, and actually gapping up, it looks like a little bit today. Divergent highs. So these highs right here, these are divergent highs, new higher high in price, and yet look at the momentum, continuing to make lower lows. So high probability that this fails. Everything is here for us to say that, okay, this should be the top of this little rally that it's done in the last few days, and it should reverse and head much lower. Okay, so if you don't see that price action, then that's the opportunity. That's telling you that, okay, something's different. But I would expect the probability that we do get more selling, all right? Okay, and this is a chart I'm very focused on, Apple, all right? The reason being is it's kind of the last pillar of strength in the market. And it's, as of right now, below the 200. The last few days, you can see we've just been chopping through the 200. So that's not exactly the level or anything that I would care about, but I definitely want to see us, flush away from the 200. The main level that I'm looking for to break is the support line that comes off September 2020. You can see support. Let me go ahead and get rid of this. Support all through this trend line here, and right there, I really want to see that break. So we haven't broke that trend line yet. We need to see Apple come and break this, whether it does it in a gap down or, it doesn't really matter. Gap down would be the best because it's the most impulsive and it traps longs. But if you don't see that break, the market's just not going to break down more until we see Apple really break. We need to see Apple break its bullish trend that it's held for a while. And then that'll give us that, just confirming sell signal. I suspect Apple probably, it's down 4 or 5%, pretty big down move. I suspect by the end of the week, we're probably right on the trend line, and then maybe next week we break that trend line. Tesla. All right, so this one should start to break down. Again, this is one of those high-flying momentum stocks, and I'm just seeing signs in the market that upward momentum is pretty much drying up, and we're starting to get pretty strong momentum to the downside. So this one, I'm expecting to come down. We do have a minor flag pattern right about here that maybe it projects us to get down to this trend line support about 780. That's kind of the next level that I'm looking for this to sell down to. But ultimately, we should head down to this level, 550. All right, that's solid support down there. And I think Tesla gets down there. So looking for continued downside here. Again, yesterday, just kind of a whipsaw, one-day Fed-induced whipsaw. Today, you're seeing the institutions kind of reading into what that is, using that rally yesterday to sell into. All right, that's what they're doing. They use that rally to sell into. They're not buying. They're unloading their positions. So just keep an eye on that. GME. This one, again, I would expect this to really start to flush hard to the downside very soon. This is another one of those momentum names. It has no, it doesn't, it's only stood up here based on momentum. You should see panic selling flood into this thing pretty quickly, and I would expect the bottom to fall out relatively quickly as well. We got earnings coming up here in June. Yeah, I don't know if we'll make it that long. So I don't know. I'm looking for this thing to just basically collapse. And I do have a position short on that. Again, we got some support down here. So probably a move down to about $40 pretty quickly. Maybe you get a bounce there. But you could go lower, a lot lower. There's another decent level of support about 17.30. So those are kind of levels to watch if you get a pretty fast downside flush out. Amazon just continuing its plunge down about 7%. Big move today in Amazon. So this is weighing on the triple Qs. I don't see any support in Amazon until about 2050. All right. So that's another, from where we're at now, that's another 11% to the downside. And this should continue to put pressure on the triple Qs. So keep an eye on that. Again, once Apple breaks, there's really no strength in these FANG stocks left. So we should see those flush out. Google kind of selling down. Facebook, nah. Mostly what I'm watching. Amazon obviously looks like it should continue lower. And then Apple's the key chart for me on the things. Okay, we've got a sell signal, a brand new sell signal on SeaWorld. So looking at this chart on the daily, you've got a bearish rising wedge pattern. See it right here. We're kind of just wedging higher. All right, that's been playing out for quite a while. We watched the downward or the support line. All right, starting back here on July 19th, you've got 1, 2, a cluster right in here. 3, there's a 1, 4, 5. 5 tags of it. All right, 5 tags of support. Today, breaking that trend line right there. Sell signal. Okay, and it looks like it came on earnings. This thing's down about 7.5%. Now the 200-day is right down there, so it looks like it kind of undercut the 200 and then bounced off of the 200. That makes sense. But again, this is a sell signal. So if you close the day on a break of this trend line, I would expect that in the next couple days to weeks, maybe we consolidate at the 200 for a little bit, but ultimately we're going to break and head lower. Okay, so I'll likely be taking a position on this one. Now, if they can bounce up and recover this trend line, then it's a false breakdown. But the way the market looks right now, and this kind of breaking right here and now, looks to me like a sell signal. This wedge, if you wanted to do a projection of where we get on the wedge, this would be kind of your widest part of the wedge, which is right about there. And it projects as getting to, right about that 57.75, maybe undercutting it a little bit. So from where we're at right now, a drop of, that's about 7% to project the wedge. So you probably get a bounce down at that level. But I like it as a sell signal right now. So moving on. Oh, and then just to point it out, big negative divergence right there. See the momentum indicators? It's just been continuing to diverge lower, dropping off, negative divergence. And while the price has been moving higher. So we have everything we need for the setup, and now we have a tradable trigger, which is the sell signal. Okay, UPS, just kind of inside days so far on UPS. Should head lower, but we need to see it break this level of support, which is about 177.70. Okay, you break it, that's your next sell signal. I'm still short. Again, we shorted it right here at the original sell signal. We're bear flagging. You can see we should continue the bear flag, so I'm going to remain short till we get down to our profit target, which is about 157-ish. I'll probably step in a little early and cover, but I still like that one. UMP continuing lower. All right, so just the bear flag's not intact anymore, so I kind of have to get rid of that one. I mean, the bear flag projects us down to about 215. I'll just leave it, but ultimately the pattern right here is not a bear flag. The bear flag would have been down, consolidate, and then down. But we kind of went down and consolidated, and then went down a little and consolidated again. So kind of throws that off. But I still like it to the downside. I don't see much change. AA, I'm short this one. Again, just selling down. This kind of looks like UMP, but we should run down to the 200-day at a minimum. And from where we're at now, that's a drop of about 6% down to that 200-day. So we're so close, we should hit it most likely. And again, this looks like it's just continuing lower. So this one is probably the final target on this one is either going to be that 200 or maybe down to 52.60, somewhere right in there. Commodities are in a bull market. So as the market continues to sell off, and especially if you see some sort of panic selling move, look for the Fed to start to walk back what they can. You know, they're going to try to continue to hike rates, I think, but they might start to walk back a little bit, and you know, they don't want the markets to crash. They want to walk the markets down. I've talked about that for a while. So basically, when you get really impulsive selling, that gives the Fed a cue that, okay, it needs to ease back on its hawkishness a little bit so that the market doesn't completely collapse. All right, so that's what I've got. So guys, if you're new, check out the course. Give me a thumbs up. I know there's a lot of action going on right now. It's pretty tough to stay with it because it's definitely fast. So that's again why I try to point out the key levels and everything in advance and how I think things are going to play out. And I talk about where I think the market's going in the long term, because when things start getting whippy, it gives us an idea of, you know, things to watch to indicate whether we're right or wrong on our longer term view. So guys, thanks, and I'll catch you on the next one. Bye.